Welcome back to Insight Sphere, your go-to source for the latest crypto trends, market insights, and expert analysis. So, Bitcoin under Trump? Not what investors expected. Instead of skyrocketing, BTC has dipped from over $100,000 to the mid-80s thousands. What's happening? And could a major shift be just around the corner? Stay tuned as dig into the impact of tariffs, macroeconomic fears, and what's next for Bitcoin. At the start of 2025, crypto enthusiasts had high hopes for the Trump administration. With regulatory reforms and even talk of a Bitcoin strategic reserve, many expected Bitcoin to break new all-time highs. But instead, the market has gone in the opposite direction. One of the biggest reasons? Bitcoin has become increasingly tied to traditional financial markets. When Wall Street gets jittery, crypto investors follow suit. And right now, the market is nervous about tariffs. Extra fees the U.S. is placing on imports from key trading partners like China, Canada, and Mexico. A global economic slowdown. Businesses are preparing for higher costs, supply chain disruptions, and lower consumer spending. And in uncertain times, investors tend to avoid riskier assets like Bitcoin. Meanwhile, gold, long known as the ultimate safe haven asset, is having a moment. Prices are up 18% year-to-date as investors flock to stability. Mark Ostwald, chief economist at ADM Investor Services, says that central banks are actually reducing their U.S. dollar holdings in favor of gold. This is a major shift. For years, the U.S. dollar was the king of global finance. But with trade tensions rising and economic uncertainty ahead, investors and governments alike are hedging their bets. For now, they're choosing gold over Bitcoin. But could that change? Some experts believe Bitcoin is still destined to become digital gold. Omid Malekan, a blockchain professor at Columbia Business School, argues that Bitcoin's long-term narrative is still intact. It's a scarce asset, immune to inflation, and decentralized, making it an ideal alternative to traditional stores of value. The challenge? Market perception. Right now, Bitcoin is behaving more like a tech stock than a safe haven asset. But in times of extreme economic stress, could investors turn to Bitcoin just like they are turning to gold? That's the billion-dollar question. Mark your calendars. April 2nd, also known as Liberation Day. President Trump is expected to announce reciprocal tariffs against 15 countries that have imposed tariffs on the U.S. This list includes major trade partners like China, Canada, and Mexico. Zach Pandel, head of research at Grayscale, believes this announcement could be a major turning point. If the tariffs are aggressive but phased in gradually, markets might actually rally. Investors could shift their focus back to the fundamentals of the crypto space. And there are strong signs that institutions still have confidence in crypto's long-term potential. Companies like Circle wouldn't be preparing for an IPO if they weren't bullish on digital assets. Institutions are playing the long game. Pandel, a former Goldman Sachs economist, sees a bigger picture. He believes that tariffs and trade conflicts will actually weaken the dominance of the U.S. dollar over time, and that in turn creates an opening for alternative currencies, including Bitcoin. Short-term, Bitcoin prices have suffered, but if the dollar's influence declines, Bitcoin could fill the gap as a global monetary asset. That's why Pandel remains confident that BTC will hit new all-time highs this year. His conviction is so strong that he left Wall Street to go all in on crypto. So, what do you think? Is Bitcoin still on its way to becoming digital gold, or will macroeconomic fears keep dragging it down? Drop your thoughts in the comments. And if you want more deep dive analysis on the crypto space, make sure to like, subscribe, and hit that bell for notifications.